Hello, and welcome back to the Fintech Takes podcast. Today's episode features a returning guest, the people's champion, the people's favorite, Frank Rotman, founding partner at 37 Maru and formerly a founding partner at QED Investors. Frank has been on many times. Every time is a great conversation. Every time is a wide ranging conversation with Frank because he can speak intelligently on a very broad set of topics. And I had a lot of questions for him. So, in today's episode, we spend quite a bit of time catching up on all things financial nihilism. Frank was one of the first people I ever heard speak intelligently and passionately about the problem of financial nihilism. And it's one that he lives and breathes every day now. So, we talk about financial nihilism. We talk, of course, about AI in financial services. Frank's perspective as a longtime investor is a really good way, I think, to think about AI and the things that may someday likely be true versus the things that are going to be true next month or next quarter or next year, and the importance of getting the timing right on AI. I also wanted to have him talk about student lending, which is an area that he's spent some time on and has some very strong opinions on because there's some recent policy stuff in the news relating to how we might fix student lending and the student lending affordability challenge. And Frank's been on the front lines of that challenge himself and had some really interesting perspectives to share. So, all that plus a whole lot more in a wide ranging conversation with the one and only Frank Rotman coming up next. All right, it's been a while, but I am delighted that you are back. Frank, thanks so much for joining me.
Well, always happy to be here.
Well, I can tell you that pretty much all of the episodes we've ever done end up at the very top of the charts in terms of number of folks who listen to them, including myself going back and taking notes from the things we talked about. So I'm delighted to have you. We are going to hit a wide variety of different topics. But I wanted to start with one that is deeply important to you, deeply important to me, one that we have had the chance to expound on together in person, as a matter of fact, which is financial nihilism, which is an interesting term because I feel like compared to when we were doing our last podcast or the podcast before that or the podcast before that, we were talking about this, but it was a term that you sort of had to explain. And I don't think it was necessarily like
Yeah.
in the water supply. It's very much in the water supply now. When I read mainstream media pieces about sort of the state of consumer finance or even just like the economy or consumer sentiment, the word financial nihilism is splashed all over the place. So I think people are starting to get a handle on it. And I will say that despite, you know, all of the efforts that I think you and others are going to try to combat financial nihilism, I continue to look around the ecosystem and see plenty of examples of your sort of probability of win equals zero mindset taking hold among consumers and among, quite frankly, companies that are trying to supply sort of solutions for consumers who have that
Yep.
mindset. I mean, there's any number of ones that come across my desk on a daily basis. In fact, I think I've developed a reputation for ranting about it, and so people will just send them to me, and it's like spiking my blood pressure every time I see them. It's like it's happening to me intentionally now. But there's things like there was Matt Levine wrote recently about a new ETF that's being launched that's based on like a set of sports bets that I guess professional investors are going to make on behalf
Yes.
of people who hold this ETF. TBD as to whether the SEC allows that one to go forward, but clearly responding to a market trend. I haven't gotten a chance yet to write about Robinhood's new Earn product, which is like a savings esque product, but built on DeFi lending that promises up to 7% APY, which I say APY as if it's a savings account. It's not. So it feels like there's lots of supply trying to sort of meet this emerging and growing demand from consumers. I wanted to ask you about all this though, because you actually spend your time as you're working on building a new company, talking to consumers, particularly
Yes.
younger consumers, and doing like first party market research about what's driving this. So take us a little inside the trend from the conversations you've been having.
Yeah, I think it's worth grounding the audience a little bit first. You mentioned a term that I kind of coined a little
Yeah.
more than a year ago, about a year and a half ago,
Mm,
called when P win equals zero.
yep.
And I think this is really at the core. It's the way that I've been able to explain this to people, but it seems to resonate instantly.
Hmm.
There's not a single person that I've talked to in the past year and a half that when you explain this to them, they disagree with you. Um, and the concept of P win equals zero is saying what happens when you realize you're playing a game and you actually do understand the rules and you think that you've basically lost the game from the position that you're in.
Hmm.
So when the probability of winning equals zero, then any move that you make is rational to you, even if it looks irrational to everyone outside.
Yeah.
So if a kid is playing a game and they realize they've lost the game, what do? They turn over the board or they get up and walk away. They don't
Sure.
finish the game, right?
Hmm.
Like the irrational thing would be to finish the game if you know you've lost.
Yeah.
So when you think about, the American dream, which is really code for, doing a lot of things right, in terms of your education, in terms of getting a job, in terms of a relationship, in terms of, looking for a stable car and, looking for housing that you can own.
Hmm.
This is like the typical American dream in the game that people were playing.
Yeah.
Follow the rules that were outlined to you by your parents, and, if you followed them, by and large, you would succeed. And, the reality is, if you follow the rules, the chances of you succeeding are actually pretty low today compared to what they were in the past. And people are
Hmm.
starting to realize this. They do all of the right things, they find themselves in the workforce. They're working incredibly hard, diligently at the jobs that they have, and they're struggling. These are by and large people who 20 and 30 years ago would have easily been succeeding and never had a care in the world about, what the future state is going to look like for them. So I've talked to a lot of consumers, let's just call them in the target demographic of 25 to 40, um, uh, digitally savvy people with college educations that by and large, like, have done all of the things that the previous generation told them they should do in order to
Hmm.
succeed. And by and large, when you talk to them, even if they're making good money in good, stable jobs, they have a lot of anxiety.
Yeah.
They do not trust that the system is working. They feel no matter how much money they've already saved, it's not enough. They believe the future is so uncertain that they don't know how to take a step forward.
Mm.
Right. So there are a lot of commonalities in talking to a lot of the younger and, the people in the middle stages of building their lives, that it's become really clear that no matter how well off you are, you still feel like it's not enough.
Mm.
And that's a really unstable position to be in. And it's where anxiety really comes from. And anxiety is a word that I spend a lot of time thinking about because you hear it come up a lot. People are anxious about their job, they're anxious about their finances. And all anxiety really is an individual projecting a negative outcome in the future with higher odds than the real chances are that it happens.
Sure.
Like that's what anxiety is. So a lot of people are projecting like really negative outcomes into the future and assigning like a really high probability that it's going to happen. And it just freezes them, right?
Yeah.
It gives them a bitter attitude. It makes them not want to do certain things that would be, commonly thought of as good and stable things to do. But this message is 100% true in the majority of the population. And that's what's really sad.
Yeah, it's interesting. I mean, you're absolutely right, and I think that I have a hard time disentangling this trend in some ways because, as you describe, I think the root of it is this anxiety, right? Which is this expectation of a negative outcome in the future that might not be grounded in reality necessarily, but is responding to real observations about the world and real experiences with the world. And it's hard because, like, as you describe, one element of this is the actual mechanics of the game have changed. And I think we talked about this the last time you were on the podcast as well, but this idea that, you know, just doing these specific things does not equal this outcome that you were necessarily promised. Like, work hard, save, go to school, get a good job, you know, buy a starter house, like all of these different sort of paths to wealth that were sort of laid out as a very sort of neat or structured path to climb are not, they've been scrambled and they've been disrupted
Yeah.
in various different ways. And we can talk about cost of living, we can talk about specifically the cost of housing and the affordability of even those starter homes and getting started on that ladder, to say nothing of climbing up it. We can talk about inflation. There's a whole bunch of different components. I think the changing nature of college education, which we're going to get back to, I promise. So I think that's like absolutely the sort of foundation. In addition to that, a couple of things that I've noticed that I'd love to get your response to. One is that I do think there is an element of sort of general anxiety or uncertainty bleeding into more specific concerns or ways in which that manifests. And the thing I always look at is like the sort of general consumer sentiment indexes
Yeah.
about the future. And, you know, like using the Michigan Consumer Sentiment Index as an example, it's at like its lowest place that it's ever been in its like 75-year history. So that clearly indicates that people feel a great deal of sort of generalized uncertainty about the future, which I think is due to a whole bunch of things. It's due to climate, it's due to politics, it's due to AI and technology. Like, there's just so many different avenues at which it feels like the world is changing at a very rapid pace. I saw a piece that Derek Thompson wrote, kind of comparing it to like the 1920s, where there was just this like huge amount of social change happening. And we went from no one driving cars to everyone driving cars, and just all of these things that were happening at the same time that just churned up these like incredible feelings of generalized anxiety. So I think that's a component that probably feeds into this anxiety and this feeling of nihilism or this sort of freezing up as you describe. The other one, and you see this on Twitter, and I'm always like nervous to ascribe Twitter as like real life because it's very much not. But you know, you get a good sampling on Twitter of like people who live in Silicon Valley and San Francisco, and you occasionally see the viral tweet that goes around where it's like someone living in the Bay Area who can't make ends meet, and they're like listing out their budget for what they spend on housing and childcare and all these different things, and they're like, I don't know where the $5 million a year that I make is going, you know. And I see those occasionally. And again, I don't want to overgeneralize, but I also wonder like what the impact of like warped expectations is on consumers' feelings around this stuff.
Yeah.
Because, you know, and probably this is due somewhat to social media and a number of other factors, but like it also feels like, you know, sometimes I'll describe to people like my life or the lives of people I've known living in like Montana, where I'm like, oh yeah, you know, there's really good friends of mine. They lived for a while in, you know, Idaho Falls, Idaho, which is where I was born actually. So I can trash Idaho Falls and be fair on this podcast. I have the right to do that. It's an awful place to live. It is a relatively low cost place to live. And when I describe to people like, well, you know, maybe, you know, move somewhere else that's not San Francisco for a few years and try that, it strikes them as sort of a fundamentally unfair idea, even though it is a sort of rational way to like adjust costs. And so I want to sort of push on both the generalized uncertainty and how that feeds in, as well as sort of how are people's expectations around this stuff being shaped, and like how does that influence that as well.
There's a lot to unpack there.
Mm,
So first, social media is not doing us a service,
no,
in this convention.
no,
Social media exists to get engagement, and negative stories get more engagement than positive stories. It just is, right?
totally.
Like,
Yeah, you don't see a lot of stories on on like the affordability of San Francisco going
yeah,
viral on Twitter. Like that doesn't go viral.
it's a boring story. It's why you see a lot of dystopian books and movies. You
Totally.
don't see ones that are all happy. It's like not an interesting story to actually read. Oh,
Right.
everything's going well. Oh, next chapter. Everything's
Totally.
going well. Like I would put that book down. Like
Yep.
there's nothing to actually read there. So social media amplifies negative messages. We see those negative messages, and there's a lot of brainwashing going on there on social media as well. So we can put that aside and just say that's a fact. That's something we're going to have to contend with, and it is part of the root cause. The second thing that you talk about is kind of the comparison trap.
Yep.
And because of social media, like it's the first time in the history of humanity that you basically are comparing yourself or have the ability to compare yourself to the highlight reel of 8 billion people.
Totally.
Now, I don't care who you are unless you are Elon Musk, like comparing yourself to the highlight reel of 8 billion people, you lose.
Well, and can
Right?
I just
Like,
say on that note, Elon Musk doesn't seem super happy either. So like I don't think he's winning either.
he just has no one to look up to on one dimension, like
Right, right,
no
right, right.
one else above him. Um, but if you're comparing yourself to the highlight reel of 8 billion people, like you can always find someone who had less skill than you, deserved it less than you, but ended up achieving a lot more than you, right? Or ended up with more wealth than you, or more fame than you, or something that you covet. And it just is, right?
Yeah,
Like, again, it's one of these things where, with 8 billion people in the world, there are going to be a lot of highlight reels that make you jealous if you actually look hard enough.
totally.
And I'll even say you don't have to look that hard because the social media feeds are designed to show you the stories that relate to you in some way and
Yeah.
agitate you and, really inspire like some, response.
But yeah.
And, that means that if you're online continuously, it's hard to escape. It's hard to escape the company that's moving faster than you if you're a founder,
Sure. Yeah.
right? And you'll have anxiety around that. It's hard to escape what's happening with AI in your profession and job loss. It's hard to escape, the highlight reel of someone who picked up Claude Code for the first time, coded up an app, and now they're a multimillionaire and you can do it too, right? And you wonder if you should do those type of things.
Yeah.
It's hard to avoid, someone who decided to be an influencer one day and they had no real skill before they picked up a camera and now they're a multimillionaire. Like these stories are everywhere and they're real.
Hmm.
That's part of what makes them dangerous.
Yeah.
They're real, but they're not repeatable. So the comparison trap is one that is really hard.
Well,
Um,
and maybe just to put a fine point on something you said, real but not repeatable ties into the path is not as certain as it used to be thing, right? So it's like on the one hand, you're being told, hey, like here's a set of things that if you just do them, you're guaranteed to get a good outcome. And that's not true. And then on the other hand, there are these sort of almost mirages where it's like there's a thing there, and that's a different way to win this game that doesn't follow that path. But it's not a repeatable formula. Therefore, I might end up. I mean, how many people? I'm always alarmed by the stat that if you ask like the average 13-year-old what career they want, they all say content creator, and it's like as a content creator, I can tell you, you probably don't want to
yeah.
do that, but it speaks to that sort of mirage element of what you're describing.
Yeah. And if you think about it as concentric circles, like
Mm,
the concentric circle of you and your 5 closest friends or family members, like you can be really happy within that small segment pretty easily. Right?
totally.
You can do things with them that make you happy. You can have hobbies together and experiences together. You can eat at each other's houses and go out and do things like that is a very winnable game, right?
Yeah.
Having a couple friends and family members that are tight and doing things to make you happy. But when you start to expand the concentric circles, you start to see the unfairness of the system and the unfairness of life. And, there are a lot of people who take that upon themselves and say, well, life isn't fair. And that becomes a burden to them and their happiness.
Yeah.
Right. So if you go all the way out to the biggest concentric circles, right, I have zero influence or roundable to zero influence over the war in Ukraine, Russia. Like
Totally.
I can't impact that. But if I pay attention to it and let it affect my life in a
Yep.
profound way, it makes me a little bit less happy, right?
Yep.
Thinking about that. And
Yep.
if you add all of the things in the world that I can't impact, there are a lot of them and I can see them every single day. In fact, it's I'm being hit over the head with all of these things that I can't influence.
Yep.
Again, when I say can't, it rounds to zero. Like,
Yeah.
unless
Yeah.
you're in a role or a profession that can influence those things, right? Like, walking out my door and holding up a sign is not going to change the outcome, but a fraction. So the key is, a lot of people are now perpetually online and they've expanded the concentric circles out to the world
Right.
because now they have access to that.
Yeah.
Um, and there's another phenomena as well, which is, expectations mismatch,
Yeah. Totally.
right? So if you grow up with expectations and then those expectations aren't met, even if your life is actually pretty good, or you could be very happy, it didn't meet your expectations. And I think there's a big expectations mismatch with what people are promised, right? Like, I went to college, I got the degree, I'm now in the workforce. Why is it so hard?
Totally.
Right? That's not what I was promised. So there's a lot of adjustment that's going to be needed in order for people to win in this new world. It absolutely can be done. I mean, I am working on a company that's in the space that in the next couple of months will be in private beta, and public after that. There's actually a book and a system attached to it as well, and that will come out first, which is really just helping people understand the reality of today's higher priced life that is more complex, and how to navigate financial decisions in it so that you can actually succeed.
Hmm.
And that's taken me a long time to put together. It is not a magic wand. It is not a magic button that you just press and all of a sudden, like, money materializes out of nowhere.
Yeah.
But it's a way of making sense of today's system,
Hmm.
that's out there, and finding a way to navigate it.
So I'm not going to ask you to spoil the surprise. We'll have you back on when things are more public and you can share more about what you've built and we can plug the book and have people read it. But I did want to talk, building on your point there, about just in general the opportunity to sort of solve this problem. And in particular, I wanted to talk about something I've been writing about a lot, which is sort of the infusion of AI in a modern context into this world of sort of personal financial management. And you were a venture capitalist for a very long time. I know that PFM is like the graveyard of fintech. Like, it's just constantly something that people are trying because they see this problem, which I think has changed shape and gotten worse as we've been describing this financial nihilism trend. But people have been trying to build tools to help here forever. And the general observation is that it works for a very small percentage of people and doesn't work for a large percentage of people. And I've always sort of analogized that to, like the percentage of people who like to, manage their bills in Excel, and they build their own Excel spreadsheet to manage their budget. Like, a certain percent of the population, their brain just works that way. And you can give them a new tool that's like basically a different version of Excel and they get all excited about it and
Yep.
everyone rushes off to do it. And there's many, many generations you can point to of products that are basically like an Excel spreadsheet for people whose brains work that way. But then it sort of fails to cross the chasm and really help anyone beyond that. I am a close student of this space because I really do want to see it succeed and I want to see it work and I want to see it work at a larger level. Um, but I also am not, naive in thinking that, like, okay, we've tried this many, many, many times and it's never broken through this like 5% of people whose brains naturally work this way. And yet, now we have this tool that we can build around that would seem to fundamentally change some of the constraints that make sort of personal financial management as a mass market product sort of not viable. So I'm curious, just at a high level, what your observations has been, because I know you've been delving deep into trying to get AI to sort of help in some of these areas. What have been some of your observations in doing that about where it can help, and then maybe like where it can't help or where it's going to be harder than we might think?
So if you think about the the most basic purpose of building a business,
Sure.
right? And this might sound a little bit too cold, but I think it's an important thing to note first. But the point of a business is to capture economic rent,
Yeah.
right? I mean, you exist to make money. And if you think about the businesses that scale and the businesses that become generational companies that people use and interact with and purchase things from all the time, they capture a lot of economic rent because they create a lot of economic value.
Yeah.
Right. So I'm moving up the chain now, right? So
Hmm.
they exist to capture economic rent, but they can only capture economic rent if they create a lot of economic value. So if you think about the PFM space, the challenge is you have these businesses that exist to make money, right? They want to capture economic rent from consumers, but to do
Yeah.
that, they have to create economic value for them. So
Yeah.
let's talk about what PFM has done.
Mm.
So PFM 1.0, we all know where PFM 1.0 was. It was Mint, right?
Yep.
And, I mean, Mint was an interesting idea that helped people understand where all their transactions were.
It was the first time you could plug all that information in a digital interface, and that was really the genesis of that.
And you could categorize different transactions. It could help you get some transparency on like which categories you're spending money on and not. And it's because if you think about the bank view of your
Mm.
transactions, right? So if your transactions come out of two places, they come out of your bank account and they come out, or your primary bank account, your checking
Mhm.
account, and they come out of your credit card,
Yep.
right? So these are the two places that if you really want to look at, where you're spending money in your life, you pretty much get most of it from those two types of accounts. But if you think about the credit card statement, the credit card never did a good job of categorization. It
No.
just told you in a linear fashion, like where you spent money and how much. And it wasn't even good at telling you the right merchant,
Right.
right? A lot of times you'd look at a transaction and you had no idea where it was from.
I can't tell you how many disputes I've had over the years where I disputed it because it was actually a legitimate transaction. I just didn't recognize the category code.
It's crazy. I mean,
Yeah.
the codes were meant for machines, not meant for human beings. And,
Totally.
the credit card companies just copied them down because that was the fact they had.
Right.
And if you think about how a bank works, it's also just linear, showing you every transaction in that month. But if you think about like the businesses and how they manage their cash flows, which is really about what a consumer is asking.
Yeah.
When you're thinking about PFM, you're thinking about saying, I don't only want to know what I spent money on and where. That's helpful, but I really want to know how to manage this better.
Yeah.
Now, what does that actually mean? Well, there's some transparency on cash in and cash out. The bank never tells you that. The bank only linearly tells you when transactions do come in.
Hmm.
If you think about how businesses manage this, you have AP and AR and you do projections.
Yeah.
This is the money going out. This is the money I project coming in. And based on previous trends of how people have paid me in the past or when I expect payment to come in, like I can project out into the future how things are working. And PFM 1.0 never really got to that. PFM 1.0 really stopped at categorizing transactions. And in fact, there are a couple PFM players out there today that are really budgeting apps. They're very good at telling you where your money is. They're better at categorization than Mint was. Mint kept falling apart because the transactions never got categorized right. And,
Right. Well, the
that's,
infrastructure is better now too, right? Like there's just like
yeah, so it's
that
like,
category has matured into what you might call PFM 2.0, which is like a more polished version of 1.0 in some ways.
yeah, so 2.0 solves some of the categorization. It solves being able to connect multiple accounts, not just a single account. It
Hmm.
tells you where all of your money is and it can categorize it correctly, but it kind of stops there,
Mm.
right? And if you think about value capture for value creation, what value has been created if you just tell someone where their money is? For some people, that's valuable. Like there is some value creation there. That's not zero,
Yeah.
right? That transparency into categories they're spending money on that they just didn't know they were spending as much. It might cause them to rethink those categories and spend less money. Um, but PFM 2.0 really hasn't gone much farther in terms of the economic value creation.
Yeah.
Right. So this is where AI can come into PFM. And I don't like thinking about it as PFM. I think about it, the next generation is going to be more of an operating system, personal finance operating system for, average, everyday, normal people. Right. And having that operating system to take the complexity of all your financial life and, be able to engage with it
Hmm.
as a holistic thing
Hmm.
and not just know where everything is. Like that would be PFM 2.5,
Yeah,
right?
yeah,
That's
yeah. Right, right,
an
right.
operating system. It's like, great, now everything is in one place. But again, like, what do I do?
Hmm.
And I think that's where AI is going to be leading us, where there's a lot of things that AI has a promise of being able to do. Now, whether it can do it today or not, it's relevant and irrelevant at the same time, because in the future, it will be able to do it.
Sure, sure.
But if you're investing or if you're hoping that it can do something right now, like there are limitations.
Yeah, yeah. Your mileage may vary in the short term, but we're going to end up in the same place at the long term.
That's right. And this next step is going to be to take the complexity of people's lives. Like if I ask you, how many financial vehicles do you have? How many relationships do you have? How many different organizations do you have, accounts with? It's a lot, right? I mean, this isn't two or three, this is, 10, 15, 20, depending on who you are and, how complex your life is. And for every one of those products that you're buying, every day that you decide to keep it is a decision you're making. Every day that you decide not to shop it is a decision that you're making.
Yeah.
Right? And things are changing quickly enough all the time in the
Mm,
financial ecosystem that there might be better answers for you out there, than the sticking with the products that you have.
yeah.
And in the book that I've written that will come out with the system, it talks about how drift is
Mm,
actually the enemy of intention.
mm,
And in a recent piece that I posted, I talk about that a bit. Um, but drift is really an enemy in this space. And I
mhm.
think the next generation is going to be able to combat drift by simplifying a very complex ecosystem and giving a consumer like a way of interfacing with it that's just less intimidating and more natural.
Yeah, I mean, to build on your point there, I the analogy that occurs to me, and this might be a stupid analogy, is it feels a little bit like sailing a ship, like an old fashioned sailing ship, like a English, HMS Pinafore type ship. And it feels like you're on the ship by yourself, right? So it's like, to your point about complexity, like there's all these different like sails and ropes, and you have to grab the wheel and you have to do all these things, and you're on the ship by yourself. And so, like, can you do all of those things? Can you really like trim the sails and get the ship pointed in exactly the right direction, make sure that you're catching the absolute best win? Like, can you do all of those things by yourself? Mechanically, no, right? Like, I don't have the time. I don't have the expertise. I don't have the number of hands. I can't be on every part of the ship steering it at all times by myself. And so, to your point about drift, it's like, all right, well, as long as the ship seems to be getting carried by the current and the wind in roughly the right direction, I'm just going to not worry too much about steering the ship. And the only time you'll see me, Frank, like frantically like taking action is when I'm about to smash into something. Like if I see something I'm about to run into, then I'm like crawling up the rigging and I'm adjusting all the sails and I'm like trying to steer the ship away from the rocks. But as long as I'm not about to hit rocks, I probably there's not a lot of benefit to me exerting any energy trying to steer the ship because I can't. And I wonder if that's a reasonable analogy for the state of kind of just complex consumer finances. And I think in particular, the thing I like about this analogy is if you're wealthy enough, you can hire a whole crew to man your ship for you. And so you don't have to do all of that work yourself. And so I oftentimes think about like, what are the what are the ways we've solved this in a completely manual fashion by just being able to throw enough humans at it to worry about these things on behalf of someone? And then what's the gap between that solution, which is not accessible, and something that can be more accessible to a larger group of people. Because I think that's, to me, that's the challenge when you talk about drift is I kind of know I'm drifting, but I don't really have the time, expertise, or just number of hands necessary to optimize and stop my drifting. And so, unless I'm going to hit the rocks, I'm just not going to take that much action.
Yeah, I mean, again, there's a lot underneath this as well from a consumer psychology standpoint, right?
Totally.
So if I were to tell you, you have to talk to Comcast Cable to cancel a membership or get something done, like you're
I'm
laughing
just going to
already.
keep paying it. I'm going to
Like,
keep paying it, Frank.
y- again, this is where anxiety comes in.
Yeah,
You immediately project that it's going to be an hour on the phone. You're going to get transferred 4 times. You don't even know what to say except to get angry with someone. Like you're
totally.
projecting an experience
Yep.
that's a negative experience that, by the way, in this case, maybe is not true. Like maybe it actually is true that this is the experience that you're going to get because you've done
Right.
it before.
Right.
And it's that anxiety and like in a busy life where you have other things to do, like, are you going to take on that challenge for the weekend to maybe save a couple bucks,
Right.
right? Or to get something fixed that kind of sort of works that you can work your way around.
Yeah.
Um, so demystifying, some of the experiences or having buttons that can press to take away some of the manual nature of how people have to do things or helping them navigate it in a very different way or taking away the frustration that they have because you've simplified it is going to be very important.
So, can I ask you the other thing that just tying back to our earlier conversation? I'm curious about the sort of AI effect here is the sort of like expectations psychology part of it. And I'm not exactly even sure how to describe this, but like I sometimes you use the word operating system. I sometimes think about like what is the pane of glass that I'm looking at that all of this information is being filtered to me through, right? And we talked about Elon before. Like Elon has not given up on his dream to build the financial super app of the future. And now it's called X, which ironically is what he wanted to call PayPal a million years ago.
Yep.
And X is going to be a money app and it's going to be fused together with the attention app that they've already built. And like, I sometimes think about like if X is the single pane of glass that my financial life is being filtered to me through, there's almost no way that I'm not going to like make really bad decisions because X is just filled with like attention grabbing algorithms that are designed to sort of like have me thinking in a not good way. And by contrast, I wonder, and I don't know what the right interface or what the right pane of glass is, but like, can AI help me get a more reasonable, reasoned view of my life they can kind of reflect back to me and help me make like calmer decisions. Because I do think like a part of, again, using my sailing analogy, like part of it is the mindset of the captain making the decisions on where the ship could go. And like a big part of that is like keep them calm, keep like, keep a steady sort of view of the future. And I'm curious what your thoughts are on AI playing a role in reshaping that.
Yeah, I think it's a complex topic because I think there's been an oversimplification of how people think about finance or financial products, right?
Sure,
So
sure.
there are ones that are very straightforward, right? If I want to buy a car and I don't want to pay for it up front, I need a loan or
Yeah,
I need a lease, right? So
sure.
there is a very specific financial product to accomplish a very specific financial goal, right? I want to drive off the lot with a car. I sit down with the F&I desk. I get a loan, right? Like that's a very basic financial transaction. Or I know I am going to need to pay people, right? Do I have Venmo as a way of doing it? Do I have a bank account as a way of doing it? But there is something that I want to accomplish that is very straightforward, and I need a financial tool to do it. And there it's about being able to examine all of the options, understand who's trying to sell you on what and why, what the price is, what the costs are. And there's a way of using AI to navigate the space to actually understand the totality of it so that you make good decisions.
Sure.
But it's to get to a very specific outcome. Then there's life,
Yeah.
right?
which is
And
more
life is
complicated.
not,
Yeah.
yeah, it is not the same as buying a simple financial product,
Mm,
right? So if you're about to get married, there's a financial transaction or a financial situation called we now have to figure out how to combine our finances.
yeah. What
It,
product do I buy from a bank for that,
right,
Frank?
right. But there's no product to buy.
Right.
It starts with a conversation.
Yep.
Right? Are we going to have it his account, a hers account, and an our account, or are we going to have a joint account? Like there's a way that you're going to want to navigate your life, right? A way that
Yep.
you want to live that starts the conversation before you can even figure out what the financial products are around it. And then you probably have some existing accounts.
Yep.
Is it shutting down this one and moving everything over there? Is it opening up a new one as an excuse to do this because you're combining finances? What are the use cases? Who's going to be looking over the finances? Right? Like it is more complex. And then there's the real world, right? Which is you're 45 years old, you might be married and you have two kids, and you're asking yourself, I'm worried about saving for their 529s to help them with college education, but I'm worried about my retirement, right? So where do I put money? And I just found out that I have an aging parent that might need to be checked into a home because they were diagnosed with early onset Alzheimer's. And I'm worried about them running out of cash. Like, this is life.
Yep.
And it's not that any one of those decisions exists in a vacuum, right? You have to understand the totality of the situation in order to be able to give good advice. And, this is where I'm actually heading with a lot of the things that I'm working on. It's everything from the simple to the complex. But the totality of everything is what's missed when you go online and say, let me research product X.
Sure.
Like you've
Yeah.
already made a determination that that is the product that works for you. But is it right in the context of everything else going on in your life?
Right.
Right? How do you order where money goes? Um, how do you navigate complex, policies that might be able to help you?
Hmm.
It's a very complex world, and it's not as simple as saying, I want to buy a car, please give me a loan.
Right, right. No, I mean it's the idea that like financial product selection sits way downstream of life decisions that there is no roadmap for you for, and there's no guide to help you figure that out. I think that is fundamentally the challenge, and I'm intrigued by the idea that AI can help sort of take in more of that broad, complex context to help guide these decisions. Frank, switching gears a little bit because you used to be a venture capital investor, and I imagine you still think in these ways from time to time when you're seeing stuff happening. I want to talk a little bit about AI in financial services broadly. um, whenever I'm looking at the news and sort of looking at all the fundraising announcements and everything, it seems like everything has to be AI something, whether it is or actually isn't, because that's the way that you raise money these days. But I'm curious, give me like one sort of AI and financial services sort of investment thesis that you think is sort of overheated or overrated, maybe a bit, and then give me one that's sort of maybe still flying a little under the radar based on what you're seeing in the market.
Yeah. I mean, I mentioned that the future state is like known. It's
Hmm.
just how long it takes to get there. So
Sure. Yeah.
everything that is being hyped for a reason.
Sure.
We're seeing an S curve, which is profound. I mean, this is something
Hmm.
I've been following for a long time.
Yeah.
I think you know this about me, but I studied AI in college. So this
Yeah.
goes
Yeah.
back
We talked about that. Yeah.
30 plus years ago for me. And, I was a code monkey back in the day writing code for the Jet Propulsion Laboratory. And
Hmm.
so, I mean, I've been thinking about this for 3 plus decades. And, we're finally at the point where big things are starting to happen that influence the average person in the world because it's influencing everything in the world. Like the technology has advanced enough that you would be remiss to brush this under the rug and say it's going away. Like it is
Totally.
going to change our lives in every aspect of what we do.
Hmm.
So when you talk about overhyped and underhyped, a lot of it is for the state of technology as it exists today.
Yeah. Yeah.
right? So I think you have to put it in that type of context. And again, investing, a lot of it is about the timing. If you're trying to build a company and the technology isn't quite right or ready, or the buyers aren't quite right or ready, you're going to fail, even if you have a good idea. Timing is critical.
Yeah, yeah.
So, from a timing standpoint, I think that there are some of the AI companies that are out there that I think are just timed wrong for what they're doing.
Mm,
So, an example, AI and fintech, there are various AI companies that are trying to sell into the banks. AI technology is developed enough that some of those things are ready for prime time and some aren't.
mhm, mhm.
So from an underhype standpoint, I think some of the back office stuff and the admin stuff, like anyone who has touched AML in their lives,
Yeah,
like that that is just an administrative task where you're putting together packets of information that you throw over a fence and never see again.
right, right, right.
And it's human beings that are putting these packets together, and by and large, like, the machines can do that so much better than humans can.
Mhm,
And that's an example of something where AI is like perfect for the task.
mhm.
And it is developed enough that it should be able to completely take away a lot of these administrative jobs.
Yeah, yeah, yeah.
Um, a lot of the AP and AR stuff within companies, like,
Mm,
it's ready for AI to come in and deal with all of this exception processing. Like, if
sure.
you think about part of the problem with SaaS in general, like SaaS software in general,
Mhm.
is that there's a long tail for any real world experience. And you used to have to code it up and understand it. And it's the long tail that had manual processes and exceptions because you just never built the software for it.
Yeah.
Now, like, all of those exceptions can be handled, by AI. Like, I,
Mhm,
I actually think back office stuff with lots of manual exceptions is like a
mhm.
perfect place. Um, but where it's not ready in banking is, hey, here's a chatbot
Right,
that you can engage with to give you advice that the bank will stand behind, that will
right.
pass the compliance department, that will make sure it makes no mistakes, doesn't hallucinate, follows policy, is repeatable, defensible. Like, it's not quite there yet.
Yeah.
A lot of the stuff that I'm building, like, I'm actually not just CEOing the company, but I'm actually an engineer on the team building a lot of the code myself.
Mm.
And I play in Claude Code 10 to 12 hours a day, and I
Sure, yeah.
understand, like, how these agents work and how the technology works. It's not a magic button where you press a button and it just does what you want it to do.
No, no, yeah. Anyone who's spent significant time with it would, yeah, firmly agree with you on that.
So the overhyping of things like a chatbot that just takes away 80% of your customer service, department, and all of a
Right.
sudden consumers are happier, doesn't quite work that way. The
Mhm.
institutions that engage with AI and are willing to dig into it and really put the time and effort in, you can get it to work. Today's
Sure.
technology can be morphed to work even at the high level of compliance standard that's necessary within a bank.
Mhm.
Is a bank going to do that? Are you going to build a company that's going to find enough banks that are willing to put that time in? The technology isn't quite there yet. It is getting there. It will get there.
Hmm.
Um,
That's interesting.
so again, I think there are a lot of benefits that AI is going to have in the entirety of the banking and insurance ecosystem.
Mm.
Um, and I think some of the ones that are going to be most impactful but are going to take time
Mhm.
uh, are some of the hard problems.
Yeah.
So if you think about insurance as an example,
Sure, yeah.
every time there's a claim, it's not just paperwork, but you might have to image the house. And the way that you image a house with today's technology is you have an adjuster go out and look at the house. They are imaging
Yeah.
the house.
Yeah.
They
No,
are
yeah.
staring at the house or the car that just got wrecked, and they're looking at the damage and they're trying to
Totally.
figure out, like, what is this going to cost to repair? And those are the type of applications that AI will actually be better at it than a human adjuster. You know,
Totally.
just with the right data, with the right attention. I think gigantic companies are going to be built around some of the hard problems, that are out there that are going to take time and focus and the right team. not the thin layers that are being put on top of general intelligence and then trying to slap it into a model that will work for a highly regulated industry.
Yeah, I mean it's a great point. The point you make about like how many banks, as an example, or insurance companies this would apply to as well, like how many of them are really willing to do the work necessary to get the thing that's close to doing what they want but not quite, which is the gap that kills everyone in financial services. Like if you can't close that last 10%, you're not in business because of how
Yeah,
highly
it
regulated and
either
trust driven it
works
is.
or it doesn't work, right?
Yeah, I
And
mean, like
at 99,
98%. Yeah,
it doesn't work.
exactly. Right. Yeah, I mean, 98% is zero functionally in financial services, which is a lesson that a lot of people have to learn through pain and experience. But, the banks that are willing to do that, I mean, the few that are out there, the few insurance companies, like if they're willing to do it, they'll do it themselves, right? So to your point about the market for companies selling into those institutions, like if you're willing to do that work, you're going to just build it yourself. Once the technology gets a little bit easier to work with and sort of gets closer to solving that, it feels like the aperture will widen and there'll be more commercial opportunities to sell into it. Because there is a lot of, to your point, there's just a lot of like suboptimal processes. I mean, even using your example about like claims adjusting, another one I've heard that I always really liked is in like business lending where you're doing like commercial real estate, like one of the last steps is you have to make sure the property you're underwriting is a real property that matches the description of what someone's trying to get a loan for. You have to send someone out to look at it. Or if you want to automate it a little bit more, maybe you pull up the place on Google Street View and you look at it. But like you still have to have a human being looking at that and making that sort of judgment decision. There's no real reason why we can't apply AI to that. It's just the technology needs to get good enough to enable that. That makes sense. All right, Frank, I promised we would circle back to student lending, which I mentioned before as a sort of, I would say, culprit maybe in a lot of these financial nihilism discussions in terms of how the latter has changed. You have made on this very podcast, as a matter of fact, the very spicy statement in the past that federal student lending is perhaps the most predatory financial product ever created. And I wanted to talk about that because there's something in the news recently, which is as a part of the big, beautiful bill that was passed last year, there was a provision that essentially requires the Department of Education to revamp its approach to solving for, I guess, college affordability, for lack of a better way of describing it. And the method they're trying to take, which has been something that's been attempted many times over the last 10, 15, 20 years, is trying to find a way to link the cost of higher education with the outcomes
Yes.
provided by higher education, which is fundamentally like your point about these being predatory products is if I'm promised X, but I get Y and it costs me this much money, like that was not a good deal. That was a predatory product. And the newest attempt from the Department of Education, and they're working on trying to implement rules to do this, is to essentially try to link outcomes, meaning if I get a undergraduate degree, what is my sort of average outcome from this particular institution and how does that compare to someone who graduated from high school but didn't get an undergraduate degree? Or if I get a graduate degree from this institution, how does my outcome, my average expected outcome, compare to just getting an undergraduate degree? And then trying to add some teeth, I guess, to the ability for those programs to qualify for federal student loans or
Correct.
Pell Grants or what have you.
So if we start at the beginning, I
Yeah.
do believe that the federal student lending program is the the world's most predatory lending program that's ever been designed.
Yeah.
And the reason why I say that is predatory is about lending money to someone when you know in advance that they can't pay you back. This is a knowable thing. And if you look at the program as a whole, like the outcomes are not great. It doesn't mean that college education is a bad investment. It means that by and large, if you look at the entirety of the program, there are things that are knowable that they decide not to know. And if they did know those facts, it would change whether they would lend the money or not, because the outcomes would not allow for repayment. Right. And if you look at all of the lending crises over the past multiple hundred years, you can almost
Yeah.
tie every single one of them back to an ability to pay issue.
Sure. Yeah.
It's when you relax the lending standards that loan programs tend to blow up. Right. 2008 was probably one of the most recent examples that people can remember about that. But, you had liar loans, you had people making up income and no one checking them.
Oh,
Like,
yeah.
you know what the outcome is going to be,
Hmm.
because if money flows, people will access that money in order to buy goods and services. Right. And in order to create a rational system, you have to have a balance. Right. You don't have to cut it off, but you have to have a balance where the outcomes actually support the lending behavior that predates it.
Yeah.
So my history here, Act One of my career was helping to build Capital One. Act Two was building QED Investors, but I had an
Mm.
Act 1A,
Mm.
which was actually building a student lending company. And did that for a number of years. And coming off of that, when I first, co-founded QED Investors with Nigel
Hmm.
Mars, um, we had friends who were in the Department of Education and friends who were in the IRS.
Yeah.
Some of them were ex-Capital One people who we knew quite well. And it was a perfect opportunity coming off of building a student lending business to say, wait a minute, I see a lot of the flaws in this ecosystem.
Mm.
Let's actually have a conversation with the Department of Ed and with the IRS and really figure out how we could, make a difference. So I spent the better part of a year laying out for people who, had a very open ear, right? These are people who we knew for many, many years, about how you would actually go about fixing the federal student lending program. And at the foundation of it was this idea that you actually had a truth file that you could construct, would be the core of how you would design a program that actually worked. And the reason why you can construct a perfect outcome file, like a truth file, is that if you apply for a student loan, you
Yeah.
have to give them your social security number.
Sure.
And guess who uses their social security number as the match key for incomes? Well, the IRS.
Right. Right.
So if you matched all of this data from basically the student lending program over decades
Hmm.
with IRS files for the outcomes, like you could produce this truth file that says literally by degree at this university, these are the outcomes, like every single outcome
So
that came.
I could essentially grade every single degree at every single university in terms of its outcome over longitudinally over a long period of time.
Long periods of time. Now, it's not perfect because today's economy is different than the economy that
Yeah.
10 years ago people were being thrust into. Like
Sure.
today's economy also needs different types of jobs than they did 10 years ago. Like
But you could
this
probably
thing,
even see universities' ability to adapt to those changes, right? Because this has been happening for a while, right? Like, does this university adapt its program to the changing needs of the market and help
it,
graduates?
it
Like that would
does,
be the
but
type of question you could ask.
but you can ask if people graduate in 5 years versus 4 years.
Sure.
You could ask, um, for and yeah, any given degree program, any given demographic, any given anything. Like this is
Hmm.
a truth file that you could construct that would be a treasure trove
Mm.
of being able to mine and create policies.
Yeah.
Again, the flaw is today's economy needs different type of people and pays different amounts of money than the past, but it's still a very, very good truth file that should
Yeah. It'd be
exist.
useful. Yeah.
Now, once you have that truth file, you could create something which is know before you go,
Mm.
which is before you accept a loan, somehow there would have to be a responsible way of looking at the outcomes, staring at it and saying, I am accepting my fate,
Sure.
right? Like there's the buyer beware,
Mhm.
version of this that says, let's just produce the data and then let the system kind of adjust itself.
Sure.
That is the weakest form of a system. And it
Mhm.
would do some good though, right?
Uh-huh.
Because if you have a know before you go policy, there are some outcomes that are just so blatantly bad that hopefully reasonable people would say this is something that, I would not want to sign up for.
Yeah, like the student lending equivalent of like a Schumer box. Like, here's what your expected costs and outcome are.
That's right.
Yeah.
Um, then there's a stronger version of this that says responsible lending,
Mm.
right? Anybody should be able to buy anything they want in the world if they have the cash for it,
Yeah.
right? I'm not going to restrict people buying a Lamborghini if they want to buy a Lamborghini, if they have the money
Sure.
to buy a Lamborghini. But if
Yeah.
you're going to make a loan to someone to buy a Lamborghini, all of a sudden you now need to understand whether they're going to pay you back, especially if there's a default, it falls on the taxpayer,
Right.
right? So there's almost a responsibility of the government because on behalf of the people who are going to basically support the costs of this,
Sure.
you should be responsible and make sure that you're getting paid back.
Hmm.
So the stronger version of this would be to create policies that say for any given degree, this is the maximum amount of money that you can lend to an individual to get the entirety of the degree, not just 1 year worth of, a loan to pay for that year's worth of education, but for the entirety of the degree. Now, that has a lot of public policy issues associated with it, but think about this in the extreme. It would force universities to basically say if the outcomes are lower, right? So if the outcomes produce, let's say, lower income professions or higher unemployment professions, which go hand in hand. But if you end up with worse outcomes, maybe the answer for the university is to create a degree program where you graduate in 2 years instead of 4,
Mm. Yeah.
right? Right. If you can educate someone with what they need for that profession in less time, that would be an answer. Now that goes against like the history of higher education, which was about broadening people's views on the world and, turning them into an adult in a safe environment,
Yeah. Yeah.
socialization aspect. Like there are a lot of other things that universities do outside of the education. But the other thing it could do is it could cause the university to rethink how it delivers that education and what that education costs.
Yeah.
So
Right.
you think about an English degree, like what materials and what do you need from the actual professors in order to deliver against people reading books and, writing about them and having someone grade assignments,
Hmm.
right? Why is that $100,000? Why is that $200,000 to get that degree?
Right. Right.
Right? Compare that to a degree which might require like advanced equipment,
Sure.
like a chemistry lab or a physics lab, right? That's a very different type of degree that requires a very different type of equipment and experience.
Hmm.
But by and large, the universities charge the same amount for both degrees,
Right.
right? They're not structured to have to adjust to deliver the result for a cost that works for the outcomes.
Hmm.
So the minute that you cut off the flow of revenue,
Yeah.
the system will have to adjust.
Yeah.
And what happened in the year that I spent trying to make a difference, the implications of a system like this were internalized and it was shut down.
Yeah.
Like no one wanted to actually tell the universities that we're going to look at your outcomes
Right.
because they know what the outcomes were going to look like. Like the
Yeah.
universities know that.
Yeah. Yeah.
Um, so this is going to be an upheaval in the overall system if anybody does actually put a mirror in front of what's happening.
Yeah.
And if we bring this all the way full circle back to financial nihilism, I think there's a very important point here
Yeah.
is that this is one of many culprits for
Mm.
why people are feeling the way they're feeling. And
Yeah.
I can actually put numbers around it. So if you think about saving a dollar the first day that you start working in the workforce, right? If you were able to have enough cash flow that you could save a dollar day one that you're in the workforce, you're probably going to be working between 40 and 50 years,
Mm.
right? For every decade that you can save that money and invest it in the market or some other similar type of vehicle,
Mhm.
every decade you can basically double your money,
Yeah.
right? So, I mean, that's 7% ish, 8% ish. Like you can double your money every 10 years. So, a dollar that you can save the first day that you start working is worth $16 or more in retirement. right? You get 4 doublings, right? You might even
Hmm.
get more than that if you can
Hmm.
save it that early.
Hmm.
The problem with an expensive college education is that for the first decade, sometimes even decade and a half or 2 decades coming out of university,
Yeah.
you end up cash flow poor because of your student loan payments,
Yeah. You don't have those
right?
extra dollars to
You
set
don't
aside.
have those extra dollars to save. So even if you're ROI positive for the degree over a lifetime,
And let's stipulate that's true. That might not be true, but let's
it,
say
it,
that it
it
is.
it is true for some degrees and not for many degrees. And in
Hmm.
fact, it is changing almost by the day that many degrees are now ROI negative.
Totally.
If you actually took the true cost into account, almost all of those degrees are going to be negative because you're not able to save money early enough in your career
Right.
to have that money work for you. And that money, by the way, if you put it into the market day one, whether it's for retirement or it's for saving for a down payment for a house, that dollar would be worth $2.
Totally.
It's saving for a down payment for a house that you want to buy when you're 32,
Yeah. Yeah.
right? And you don't have that money because you weren't able to save it because of the high cost of life, which is a combination of housing and your student loan payments, the cost of healthcare, like everything adds up.
Hmm.
And student loans are just one contributor, in fact, a very large contributor for people who come out of college with, significant debt.
Totally.
So all of this contributes to nihilism because you're just not able to make the traditional way of closing the gap work,
Right.
right? So again, I've done the math on every single category of the major expenses in your life. I've done the math on what it takes to manufacture a life.
Yeah.
Like the math doesn't work anymore. Right. So it needs an entirely new way of thinking about things. And again, student loans are just one contributor.
Yeah, I mean it's a great example though, and I'm glad you tied it all the way back because it does feel like, and this speaks to the sort of unwillingness of the system to change. The most recent thing I've seen with this kind of revamped approach to trying to fix this problem is they're still not able to construct that truth file, and I think ostensibly the reason is because the IRS is like legally not allowed to share certain data or whatever the things are. But fundamentally, I think the more important point is there are a set of stakeholders that sort of benefit from the status quo of how this works. But, you know, what we have to reconcile with on the back end of this is, I don't think a lot of people are thinking about, Department of Education and IRS policy as contributors to consumers' interest in DeFi lending protocols or sports betting as an investment thesis or whatever. But like the two actually are directly connected and kind of gets back to your point over the course of this entire episode. All of this stuff is complex and you have to look at it at its entirety if you really want to try to solve it.
Yeah.
Frank, that is a great place to leave it. Thank you for coming back on. We will have you back on sooner next time. I know you're working on getting the company that you've sort of been hinting at off the ground. So when it's off the ground, we'll have you come back on and share a little bit more. But in the meantime, thank you so much for sharing your expertise. As always, a real treat.
Well, happy to. And I'll be back in a couple months when we can talk about some real things.
All right, I'm looking forward to it.